there, Dale.
Well, good morning. How are you?
I'm doing as well as I should be. How are you doing?
Well, I'm not sure you should be doing well, but that's okay. That's another subject, another day.
It's for another day. We're back at it with a Tuesday morning market update, and we're going to talk about the government shutdown and basically what it's going to do to rates. The simple headlines, we're going to see some reports that are coming out. We'll talk about those in a second, but they're probably going to be delayed, at least a very small amount, just with the shutdown looming. Treasury bonds are going to decrease slightly. Dale, what is it? Why does that matter? And why would treasury bonds decrease?
Well, when you buy treasuries, you're investing in the government. So if you're investing in the government that's shut down, well, there you go.
Yeah, you're basically saying for 10, 5, 15, 20, 30 years, I think the government will be responsible enough to pay me this money back plus the interest that it gains. So whenever treasury bonds go down, mortgage-backed securities go up, aka mortgage rates go down. Remember, it's an inverse chart. And then, of course, the deadline is midnight tonight, or if you prefer to think about it, Wednesday morning at midnight. So we'll see what happens if the deal comes. We might be talking while a deal is being made right now. But if a deal comes, then these news items may or may not be delayed. So we have JOLTS, Case-Shiller, FHFA today, Tuesday. Wednesday, we have ADP mortgage application report, Thursday, initial jobless, and Friday, BLS. Now, there are three of these on this chart right here, Dale. ADP, jobless claims, and BLS. That are kind of critical. Why do those news items actually matter to us?
Well, jobless claims, jobs reports, that all ties in with mortgage rates. In fact, you'll recall we discovered some time ago that there was 1 million over-reported jobs over a year ago. And, when there's a lot of jobs, well then, people can afford to pay more, rates go up. When there's not a lot of jobs, rates go down. So the reports are important, but probably what's more important is the accuracy of the reports.
Right. So it could all be a moot point. These reports could be completely inaccurate and they mess everything up anyways. But yes. Aside from inflation, jobs seem to be the number one factor, aside from inflation, on shifting mortgage rates. So this week will be a good tell on whether or not the Federal Reserve plans to make any more additional rate cuts this year, and whether or not mortgage-backed securities will improve, flatline, or maybe even get worse. So let's take a look at it. Right now, we are on September 30th, the last day of the month. Here we go, October, and we have a slight itty-bitty rebound here. And this is based on the government shutdown and the potential for U.S. Treasury bonds to decrease in value. But I do want to point this out, Dale. We called this all the way back in the middle of July when the Federal Reserve cuts interest rates right here. That's when they cut rates. We would see mortgage-backed securities go down. Remember, this chart is inverted. So, Dale, what did that do to our regular interest rates that we look at?
It bumped rates up a little bit. And we anticipated that simply because lenders hedge. The Fed cuts the rate. If they cut too much, the hedging is the important part. And generally, lenders hedge too much, rates aren't cut enough, and rates go back up. So.
Right. Now, I did include this. We normally cut this part out when we put it in the presentation, but the 52-week range over the last year, we are on the kind of lower side of this 52-week range. So we put it in perspective. No, it's not where we want it to be. No, it's not heading the direction we want it to head, but within the last year, we are definitely on the lower side of mortgage rates. So we reiterate, now is the time to buy, because if either rates go up, you missed your chance, the house is more expensive, or if rates go down, fantastic, you have the opportunity to refinance and you still got the house for a cheaper price. So, Dale, thank you. Appreciate the information, and I'll catch up with you next week.
Have a great day.
All right, you too. Bye.